What's up, YouTube? It's your boy Bitcoin Lunatic, and today we got with another W video. So if you all are wondering, I'm gonna just get straight to the point. If you all are wondering why my account balance is the same as the previous video, that's because the trade that I'm about to go over today, that's the trade that actually that I placed today. I made $560, and yesterday I made $301, but I did not start recording until today. So the previous video was me making that 301, but I didn't record it the day I placed the trade. I recorded it today after I placed the trade and made 560. So that's why the account balances are the same. So today I traded XPS 500. I risked $100 to make 561. On the live account, obviously, if you look to the bottom left, on the bottom left hand corner, you will see that it says live, and right here you will see that it says today, and this is how much money I made today: $591 on a live account. I am flipping this $500 account to 5,000. So let's get into it. So my bias for the week period on SPS 500 or any indice is bullish. Based off of the daily and the 4-hour chart, you know what I'm saying? We had this new week opening gap. Yesterday was bullish, today bullish, tomorrow gonna be bullish. I'm bullish all the way until the end of the week. So if we see bullish market structure, we see higher highs being broken, higher lows being created, right? So what we did was we broke this swing high right here. We created a 4-hour fair value gap. We came and dipped into that fair value gap on this candle, and we closed above these sets of down closed candles. So all in one, you know what I'm saying, on the 4-hour we have a C2 sweep. That's what this is. So for those of y'all who don't know what a C2 a C2 sweep is, I'm getting over a cold, so if my voice sounds a little different, this is why. But for those of you all who don't know what a C2 sweep is, it's basically when price breaks the low of the previous candle and close within the range of the previous candle or above the high of the previous candle. So that's basically what happened on the 4-hour chart. And we have these sets of down closed candles that we closed above as well, creating a change in state of delivery. So we're not delivering sales anymore to take out sell side liquidity. We're delivering buys to take out buy side liquidity. So once this candle closes, I go to this candle after. Let me delete all this. Once this candle closes, I basically draw my line out for the next 4-hour candle, right? When the next 4-hour candle opens, remind you, this is the close of the previous candle, so we're going to take that and draw it out. So when that next candle opens, go to the 15-minute. I just simply want to see a change in state of delivery. So we have this swing low right here. Price breaks the low. Then it comes, these sets of down closed candles that took out this low came right back up. That's what you call a reversal, right? I'm gonna tell y'all why. In my opinion, the difference between a retracement and reversal is the speed. So you have expansion met with expansion. That equals reversal, right? That means price is no longer in a downtrend. We're now reversing to go higher. So when price closed above these down closed candles right here, I simply bought. You expect for this low to hold, this low right here, you expect for it to hold, and then you aim for, most people do 2 to 1s. On this trade I did a 1 to 5, a 1 to 5.6, because I risked 100 and I made like 561. So I entered at 7:15. I got out at 11:15. That's 3 hours. 1 to 5. That's not bad. And all I did was just trust my trade, man. Trusted it. I held on to it. Like I said, it's my entry time frame. So once we came up, you know what I'm saying, we traced, came into this fair value gap right here. You know what I'm saying? So why would I look to get out? Even though it's big bearish candles, why would I want to get out? We didn't break and close below this fair value gap. We still bullish. Price came up, created another fair value gap. Did not come into it, took off. Created another fair value gap. You can tell that we bullish. It's obvious. Don't look for sales in here. We're bullish. We're gonna keep going up until we reach to this level right here, which is on the higher time frame. Like on the daily chart, it's a external buy side liquidity. See, it's a long-term swing high. So once price gets to this area, which is external buy side liquidity, we could be looking for potential sell scenarios. But if it breaks and closes above it, and you know what I'm saying, retraces and breaks that swing high, then okay, now we're gonna continue to be bullish. But I would look for sales in this area unless price breaks and closes above it and shows willingness to go higher. But this is definitely the next level that price is drawing towards, and you can just follow it on a 15-minute. I mean, it's pretty simple. I been got out the trade, but if I would have still been in the trade, I probably would have been up about $750 on risking $100, which is not bad. Have another fair value gap right here. Have another fair value gap right here. Price came into the fair value gap, and now we're breaking. We're going higher, looking to break and close above. This will be a continuation trade. If price breaks and close above this trade, I would look for a buy. I wouldn't like overcomplicate it. I wouldn't overcomplicate it like some people look at it like, oh, we've been going up, so how you know when it break this high, it's not gonna drop? They think like, oh, it's gonna break this high, and then it's automatically gonna start like going lower. But it's like, if that was the case, it would have did it right here at this high, or at this high, or at this high. You know what I'm saying? It's not going to do what you think. It's not going to just break that high and drop. Why? Because the next draw on liquidity on a higher time frame is this white line right here. So until we get to this white line, I don't even want to think about selling. You know what I'm saying? If my strategy shows, like my continuation strategy is simple. If this was New York session and I was looking to trade this, once price closed above this pink line, I would buy. Let's say it closed right here. I would have simply bought. And I would have put my stop loss at the low. And I would have aimed for a 3-to-1 or a 4-to-1. You know what I'm saying? Let's say we just simply aim for a 4-to-1. Right here. You know? And I would have just, held on to my trade, and I would have just been looking for more reasons for it to keep going higher. More highs being broken. Excuse me. More bullish fair value gaps. You know what I'm saying? It's that simple. It's that simple. You don't have to overcomplicate things. This account started with 500 this week. Today. Oh my God. Today is Tuesday. And we already at 1411. That's crazy. I just started this account. I just put the 500 in there on Sunday. And today Tuesday, and we already at 1411. And the crazy thing is, I'm not even over leveraging. I'm not risking $200 per trade or $300 per trade. The most I ever risked on a trade on this account was $100, and I think the least was 40. So it's between 40 and $100 per trade. And I only took like 4 trades, I think. No, 2 trades. I only took 2 trades, 2 to 3 trades since I put the 500 in there. So that's crazy that we already at 1411. You know, you don't have to risk a lot of money on your trade. You know what I'm saying? To to flip that account. So yeah, man, it's your boy Bitcoin Lunatic, and we out.